So the dollar, Trump last time around, same thing. The markets priced in tariffs. The dollar screamed higher. It created this weak patch of growth. Trump came out and said the dollar's too high. Guess what? Scott Bessent, who's a macro hedge fund manager, I've known him for 20 years, 25 years. He understands the game. Trump said the same thing. Everyone said the same thing. The dollar's too strong. And hey presto, the dollar has utterly collapsed. So it's a very powerful setup. A weak dollar is incredibly good for world growth. It allows China, everybody else to start exporting. The whole world economy starts picking up. The last time this happened, the Trump cycle, well, that was the initial correction that we got. We had this whole period of correction, much like we've had now. It stopped in about March. Well, we got to about April. And then we did this. And from that correction low, it did a 23x. Now, I don't expect Bitcoin to do a 23x.
The US dollar is starting to weaken, and if history repeats, Bitcoin could be gearing up for another explosive rally. Real Vision CEO Raoul Pal points out that current conditions closely resemble those that preceded Bitcoin's previous 23x move. Over the past few weeks, Bitcoin has been caught in a storm of market volatility, not from crypto-specific events, but due to global economic uncertainty. Traders are reacting to shifting interest rate expectations, dramatic inflows and outflows in Bitcoin ETFs, and rising geopolitical tensions, creating a market that feels suspended between a fading bull run and the onset of another crypto winter. Institutional behavior around spot Bitcoin ETFs has been a key driver of recent price swings. When money flows in, momentum pushes prices higher. When it retreats, the market stumbles. This volatility is compounded by renewed regulatory pressure from the US and Europe, as well as broader political instability that has investors questioning where real stability lies. Bitcoin now finds itself in a kind of identity crisis, caught between being a hype-driven speculative asset and a potential digital alternative to gold. Despite the chaos, macro analyst Raoul Pal remains optimistic. Based on years of studying liquidity cycles, central bank policy shifts, and asset performance, he believes Bitcoin's current pattern aligns with previous cycles that led to major rallies. With the Federal Reserve likely to adjust its stance and global liquidity conditions starting to ease, Pal sees the potential for Bitcoin to enter a strong upward phase rather than a prolonged decline. The same ingredients that fueled its past 23x surge could be forming once again. This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
Firstly, I use a framework that I call the Everything Code. It's something that I've spent 35 years building in macro, where I started to realize that the dominant factor in all of macro is actually liquidity and the debasement of currencies, and it explains most price movements in all of the assets that we care about. And I realized that it's all to do with debt, and it came from why we're seeing 4-year cycles in crypto and the economy and all of these things is actually driven by the debt refi cycle. The world just reached too much debt back in 2008, and what we've been doing since then is servicing the debt. We've also got some other key factors. This chart is a chart that I produced a few years ago. It's still the single most important chart in macro and explains everything that is going on in our world today. And this is the fact that demographics is everything, and the demographics of the aging populations across the Western world, these are the US numbers using the labor force participation rate, explain the build-up in debt. Why that is as populations get older, economies slow down. To service the existing debt, it requires more debt. To create GDP growth, you need more debt. See, GDP growth is driven by population growth, productivity growth, and debt growth. And debt growth has been the driver both in the US, in China, in Europe, in the UK, all across the world. It's all driven by the same dynamic, and that's this aging population thing. It slows down GDP growth and creates unstable economies. And that chart just shows the stunning correlation between debt to GDP and population itself. What's interesting is then when you go one stage further and say, okay, we're seeing this debt, how are we dealing with this debt? And it's actually just driven by liquidity. So here I'm using Fed net liquidity. Fed net liquidity is the balance sheet of the Federal Reserve, the Treasury General Account, which is the Treasury themselves, not the Fed, and then the reverse repo facility. These are the levers that they've been using. It started just using the balance sheet, 2009, all the way through to about 2014, it was just the use of the balance sheet. Then they started sneaking in new ways of debasing currency, and that was by adding in these other levers, getting banks to put reserves here or take reserves out there, or injecting money into the economy via the checking account, the Treasury General Account. That's actually shifted to total liquidity now because everyone figures out the game, which is the debasement of currency, debase the currency, try and grow GDP growth and lower debt to GDP or just manage it. Now they're using total liquidity, which includes measures like M2, which is the banking system as well. So when you add those things up, this has, and I'll show you these charts later, the most stunning correlation of all time to all assets. So 90% of Bitcoin's price movements are driven by total liquidity, and 97% of the NASDAQ. So here's the real issue here. Why are the rich getting richer, the poor getting poorer? Well, scarce assets keep going up in price. Real estate, equities, art, gold, all of these things. Young people can't afford it. Poor people can't afford it because they've got variable income, which is earnings, and it buys them less of these every year. What's actually happening, what that mechanism is a tax on everybody of 8% a year. A global taxation of 8% a year that you don't understand. You just don't get richer by 8% a year. Add in another 3% global inflation, you're at 11% debasement of currency. That's your hurdle rate to stay as wealthy as you are today. That's a staggeringly difficult thing, considering most asset classes don't produce those kinds of returns, which is why so many young people have come to crypto, because crypto completely upends this system. They can't buy houses, they can't buy all of the other things that older people were able to afford. So they forced into more speculative, high risk assets that have much higher returns. It's the only way out of the trap. And the trap is driven by this debasement. So if you want to see how close the correlation is, and I'll show the full correlation chart later, it basically drives Bitcoin. And what we see is there's periods where it decouples, and these are the banana zones. It decouples when what we get is the retail frenzy, and the frenzy into the market, cools off, comes back to trend rate of this debasement of 8% or so. But over time, it produces astonishing returns. And that's why Bitcoin looks like this on the log regression channel. It's also still remarkably cheap. Where it ends up at the end of the banana zone is usually the 1 or 2 standard deviation level. We're a long way from that, and that would give us much higher prices. You can't see it on this. But if it were to get to 2 standard deviations, that would put Bitcoin at $850,000. I don't think it's going to go there, but what we're saying is there's plenty of upside to come. I know people get frustrated in sideways markets. It's just the nature of the beast. It does nothing, corrects for a while, and then explodes out of the traps. And we're kind of in that phase now that I'll talk to you about.
Raoul Pal recently laid out a clear framework for understanding not just Bitcoin, but the broader financial system. At the heart of his analysis is liquidity, the flow of capital that drives markets upward during periods of growth and keeps them stable during downturns. He explains that this liquidity cycle is influenced by global debt, aging populations, and a monetary system dependent on currency debasement to stay afloat. In such an environment, scarce assets like Bitcoin become increasingly valuable. For younger generations locked out of traditional investments like real estate, Bitcoin offers a hedge against the slow erosion of purchasing power. Pal estimates that most people lose 8–11% of their real buying power each year without even realizing it. As a result, Bitcoin is becoming a tool for financial preservation in a system that quietly chips away at value. Pal believes we're not at the end of Bitcoin's current cycle, but somewhere in the middle of a larger upward trend. He describes Bitcoin's typical pattern as long stretches of consolidation followed by explosive move. Right now, he says we're still trading below the range where speculative peaks tend to happen, suggesting this quiet phase could simply be the build-up before the next major rally. Let's return to Raoul Pal as he continues to break down what could come next.
Crypto is a supermassive black hole that simply outperforms and sucks every other asset dry. This is the big one, the biggest one we've ever been given, the greatest macro opportunity of all time. We've got the central banks debasing currency, which is giving us a gigantic tailwind. They don't want the system to break, so every time something happens, they inject more liquidity. So they're giving you free money. And to take that money, you need the volatility. So what causes the volatility? Well, it's actually driven by liquidity again. Once you come to narrower time horizons, liquidity changes things. So we've just gone through a 3-month period of the market feeling shit and everyone's saying it's all over, we're never going to have alt season, everything's terrible, we're all going to die. What was actually happening was the fact that in Q4 2024, financial conditions tightened. And we measure financial conditions by the dollar, rates, interest rates, and oil. All of those went up in Q4, and there's a 3-month lag, and it drives it. So here's a simple way. We're now seeing people saying the economy's slow, shipping's slow, all of the tariff stuff. The market's priced in this tariff stuff last year once they saw the probabilities of a Trump re-election. So what we've got here is the economic surprises index of the US versus other countries in the world, i.e., when it's going down, the US is underperforming in economic surprises term. When it goes up, it outperforms. It's basically just following the dollar and rates. And what it's saying is, whatever noise we're seeing now in the economic data, which is some of the tariffs-related stuff as people have built inventories very quickly, liquidity is going to completely erase that very quickly. We saw it exactly in 2017 when Trump imposed similar tariffs, similar backdrop. The dollar and rates fell. And what we saw back then was the same collapse in the economic surprises index. We had talks about recession all over again back then. Trump's going to create a recession. Then what happened was the liquidity conditions drove all economic data higher. And when we look at that economic data, Bitcoin's already priced it in. It's already priced in, weaker than the economic data itself. So what are we fearing right now? What are people worried about? People are worried about what they're doing is creating narratives for today to explain liquidity conditions from 3 months ago. That's the ridiculousness of what goes on Twitter all day, is a lack of understanding of what actually drives these markets. What are the dominant factors? The dominant factor is financial conditions, which lead liquidity, which lead markets. And even in markets, it's gold actually follows financial conditions the closest. Then with a lag, it becomes crypto and tech. Then with a lag becomes the S&P 500, cyclicals, commodities, all of those things. So people are talking about recession now. We've had this negative GDP print. A lot of this is technically driven by the imports that are happening to load up on inventories as tariffs come, so people don't have the price shock. Okay, fine. So most of this is going to get unwound. Why? Because global growth is about to pick up super fast. So the Philly Fed, this whole presentation was put together a week and a half ago to send here, so it's all out of date. So the Philly Fed latest numbers came in exactly as predicted by us, by this chart. It's actually quite useful because I just went through this deck this morning and all of this was from 2 weeks ago and it's all proven to work. So Philly Fed comes down now. So what we should see is now an increase in economic activity going forwards. So the back end of the year is going to look very different than the first quarter did. I use a lot of technical analysis. I even do it on economic data, which is abhorrent to most people, but it's worked for me for 35 years. And I use, this is a system called DMARC indicators. And basically it's telling you that we should see the economic surprises starting to rise. Bitcoin is led by financial conditions here by 3 months. The year-on-year rate of change of Bitcoin, we should start to see very dramatic movements in the price of Bitcoin going forwards. And I'll show you a bit more about this in a sec. So the dollar, Trump last time around, same thing. The market's priced in tariffs. The dollar screamed higher. It created this weak patch of growth. Trump came out and said the dollar's too high. Guess what? Scott Bessent, who's a macro hedge fund manager, I've known him for 20 years, 25 years. He understands the game. Trump said the same thing. Everyone said the same thing. The dollar's too strong. And hey presto, the dollar has utterly collapsed. And we haven't started yet. And it's a cyclical thing. It's not the end of the dollar. That's another narrative you read. There can't be the end of the dollar right now because 87% of world trade is in dollars and 50% of the entire world's debt are in dollars.
Raoul Pal emphasizes that financial conditions have a direct impact on asset prices, and Bitcoin is no exception. Historically, when liquidity tightens, markets tend to cool off. But when central banks ease conditions, often in response to economic stress, asset prices typically rebound. Bitcoin has shown a strong sensitivity to these shifts in recent years. One of the key drivers in the current cycle is the mounting pressure of global debt. As governments navigate growing debt burdens, central banks often respond by expanding their balance sheets to stabilize economies. This process injects liquidity into the system, supporting a broad spectrum of assets, from real estate and equities to more speculative plays like Bitcoin. Although today's financial environment presents new challenges, the underlying forces shaping market behavior remain consistent. With the dollar weakening and liquidity on the rise, conditions are once again becoming favorable for risk asset. While Bitcoin's future gains may not match the explosive rallies of the past, Pal believes the next move could still be significant in both scale and direction.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.